Good morning, guys. Welcome to this Monday, December 15th. And we got not less than a week and a half before we run into Christmas. So I've been talking about that all since summer, just getting you ready. And here we are. And my week ahead, we've got freaking Christmas coming up. Yay. So, market, we rolled to the H26 contract for today's trading. Just so you know, if you haven't done it, just make sure you roll. Right click on the Z25 expiration in the symbol manager and roll to the current front month. But the H26 is what we're trading. I rolled these markets and that's where we are. And as you can tell, the future contract for March is up. It's way up. Yeah, you remember Friday's trading was pretty much a debacle, major risk off kind of thing. We were up here at the highs to get started that Friday, and we ended up way down here. So we backed off pretty good. So risk off Friday did not look there was not much recovery to be had that Friday. And if you look at if I scroll this guy up a little bit, um, there you go. There it is. Right, you can see here we were all the way down here in the low 6,800s. Before we finally found balance here right at the close at 68.30. So not quite taking out the lows here that we had at 68.20 and 30. That was the levels they kind of had to hold. They were definitely probing below it, and then we ended up closing above it. And you can see here how we gapped up for the March contract when I rolled that, and that's it didn't gap up outside the range, but it gapped up from the Friday close. And so far, that's where we are right now. Up a little bit. We'll see how this day shakes out. So I'm going to be less. I'm going to just stay in range bound right now. I'm going to not expect this little gap up to mean anything. Since we rolled to a new expiration, it could very well be just that they're going to find balance here right in that same range again. And we'll see how this is going to back off or not during the day trading here. So most of the volume rolled, but we're still rolling volume into the March contract. So, and remember, I used to roll this. We were trading March on Friday. That was used to be pretty skinny, pretty slim on the volume here on the ES. But I bought the ES primarily Nasdaq actually, but it should be a little bit better now. Now, the news for this week, we have a ton of news coming out. So today's not too much. We have at 8:30 we get Empire State Building, or Empire State Manufacturing, Empire State Manufacturing. We get housing market at 10, and that's about it. On Tuesday, I'm seeing employment situation in the calendar. Housing starts, retail sales, PMI composite business inventories about 8:30 and 10, and 8:30, 9:45 and 10. But the house employment situation on Tuesday, that's unusual. Like halfway through the month, so I guess I'm catching up on reporting. But that's one of those things. We'll see. There could be some action here tomorrow then. Wednesday, retail inventories, retail sales. Thursday, we get the CPI read in jobless claims. And then Friday, we have personal income and outlays again. So, okay, so we got a lot of news coming out this week. Could be a pretty choppy week at that, depending on how the news comes out. And then, of course, we're getting into the Christmas week. So this whole week is a full trading week. Next week starts on December 22nd, and we have Christmas like the Thursday is Christmas Day, 24th is on Wednesday, so midweek Christmas. It's going to be a slow week. All right, so I'll check on that schedule when we get closer to it. But right now we are pretty much in the same range, and just because the market is trading up doesn't mean much since we rolled to the March expiration. It is a futures contract, so it's looking out for the March expiration. Now we are. I would start off range bound. I would still look to sell strength for rotations down. I mean, I'm holding out for the Christmas for the Santa rally to kick in. So far, it's been a rough one. Trading up and then getting knocked down, trading up, getting knocked down. And Friday was something, that was a really good knockdown. and that's right, could be part of a rollover issue as well. It's starting off range bound right now. Looking to sell strength. We're trading up here at the 69.25. We're looking for short setups against 69.25s. Above that, I would be a bit more inclined to see if they can take it higher. I mean, the rollover also opens up some doors. If they gap up above the key resistance areas, it's been holding the market together, we're going to have to find new ones. So we may be seeing this one go head up in new territory. That would be positive. I would stay on the long side if that happens. But right now, I'm still looking for short against the 69.25s, potentially 69.40 and 50s right now, since we are in a new expiration. If they back off and start trading below these two support areas, the 69.10 and 6900s, we are back in that lower range, and we're going to stay like that. So that's what I'm thinking right now to get started. That's the plan. So early on, looking to buy 69.10, 6900s for rotations up, looking for shorts against 69.30, 69.40, and 50. And if they back off below that 6900, I think we are back on the range again. And if they don't, if they hold here and start trading higher, I would be more inclined to start leaning in on the long side. So maybe the new expiration really takes us into new territory and get things going here. So that's where we get started on the ES H26. All right. Volume right now on those markets. Hang on, get there. So the volume on the ES right now is like 64. Volume on the micro ES is 144. All right. So that's so the ES usually trades 100,000 or so in the overnight. That's 64. So they're still rolling in volume there. Probably after today's trading, it'll be back to normal. NASDAQ 144, also a little bit on the downside, but we're gonna have to give it probably a day for it to finally roll most of the volume in there. And if you look at the NASDAQ here on the exchange member chart, you can see NASDAQ was in pretty crappy shape going into Friday's trading. They really took it on the chin. They were way down here. They were way below this area, the 25, 350, 360s, that volume edge. And that's still very much valid. But the rollover got us right back into that prior distribution again. So, okay, we're starting off range bound, same story there. Watch these lower support areas now. Anything below below 480, 450, 390s, looking for buying opportunities. Last one would be down here at the 340s. But this whole support area now, it's the same as we had before in the December expiration. And if they trade below it, yeah, we're back in some trouble. So, but at this point, we are above it. And so we are back range bound. And this feels a little bit more natural. The ES popping like that, I'm thinking they're going to retrace it, at least to get started. But it's NASDAQ right up here against, right in back its value. That's believable. And see if they can make a go out of it. But I'm going to start off looking for shorts against the 620s, 690s, 730s, 800s, up to that 870s. I'm going to leave everything kind of open. It's going to have the better resistance that things comes at the 690s and the 730s, rotations down. Looking at the on the way down, I think the better buys comes at the London low, 480s, 440 to 430 to 40s, down to that 390s for rotations up. I think below 390s, you have one more level to take out that volume edge. But I think these first three levels, because you see here from the prior distributions, you had a bounce off here a few times. It's just that Friday trading when they completely blew through it, and then maybe never made it back up again, above it. So it's I think the below that 390, I think we really had then we start thinking short out of the market in a much bigger way. Starting off range bound, I'm going to buy weakness against that 530s, the 480 to 90s, 440, 430 to 40s, 390s for rotations back up again. And then we'll see how the whole thing shakes out. So starting off primarily range on both ES and NASDAQ, watching that a new expiration to see if we're going to get some momentum to the upside. on the roll, or if they're just going to kind of hang in the same range. Worst case would be that we get the more weakness. That would be like a counter Santa rally. It would be a kind of a backwards thing, but you never know. So that's where we start. Finally, bonds. And again, trading bond market, always interesting. Had to be a lot more deliberate about it. And the bond market so far backing off a little bit from the lows, but they're still right in that 115. So it's a very orderly transition to the downside. They are right down here in this low range. Now, if they're not going to keep moving lower, start stalling here, I mean, may actually end up taking these two distributions, folding them together, because this is going to start to be, this is between the two distributions. So now you're building out, so this is a J split. So if I fold this together like this, you can see that building value right in that low volume area right now, going back and forth between these two high volume areas. So I can leave it like that. It's not necessarily a super bad way of looking at it, right? But so you have a tractor up here at 17, you have an attractor down here at 14. We're building value right in between, and there's a lot of value to be built. So we may be just hanging in this range, going back and forth. If I fold this together, I fill out some of that range, and then we just see how this whole thing comes together. So there we have it. I'll leave it like that for a while. See, yeah, I'm gonna go back and resplit that later too, but it looks like they're very much coming to balance in that area. All right, so looking to buy a weakness, 115s, 114.22s, 114.16 to 18. We're going to sell strength against the 1505s, 10s, up to the 1516s. That's my range for today. That's the way I'm going to start this off. If they start trading above that 115.16, I'm going to start leaning towards the long side. And below the 114.16, we are going to be on the short side of this. All right. And in between, I'm going to start off range bound right now. It's been a slow grind to the downside, but the fact that they've been going back and forth and they're running it up in between, that tells you it's not quite a repricing going on. It is just the bond market going back and forth. They're trying to find balance, and the between 114 and 117 seems to be the range they're going back and forth right now. The momentum up above the 117 we had before is definitely not happening. So yields kind of settling in a little bit higher than before, but not necessarily crazy at this point. All right, so that's the bonds starting off range bound, and that's everything starts off kind of range bound. And I'm just going to be watching the ES and NASDAQ very carefully to see if that rollover turns into a little pop to the upside or something else is going to start happening. So, all righty, guys, we'll leave it there. So I'll wrap it there for now, guys. Good trading, and I'll see you guys back at 11:30 for our next update. All right, guys, later.